Hello?
Hey, how's it going, man?
Hey, good. How you doing?
Good.
Do these headphones work good?
Yeah, they're cool.
All right.
The most important part is just so we don't get an echo. So if you're like on your speakers, a lot of times people will do these and they'll have it on their speakers. And they'll come out their speakers and go back into the microphone.
Oh, okay.
So, yeah.
Got you.
So I don't think Rashawn is going to be here today.
Okay.
We're just going to fire it up and let Donna the voice chop it up. So it actually is 6 o'clock. Give me 1 second.
Okay.
All right, we're already recording. So this is the Oglesby and Scott Show. My name is Charles Oglesby, also known as Todd, millionaire, the founder of a lot of different really cool ventures that we started. Also the founder of the options community, all the different cool things we've created. Today, we have a special guest. He goes by the name of Noah Lawton. I'm sure you guys saw the viral meme. It was on Black Wealth Renaissance. I also posted it to my page. He's doing some really cool things and he's doing it the right way. I always tell people to take the quick money and then turn it into forever money. If you guys didn't get a chance to see the meme, essentially what it said is he had taken drop shipping money and options money, and he bought his first rental property at 19 years old. So 19, right?
Right. Just turned 19, actually.
That's crazy. That is really crazy. So welcome to the show, Mr. Noah Lawton.
Appreciate it. Thanks for having me.
Can you tell people a little bit about who you are and where you're from?
Okay, so I'm originally born in Boston, Massachusetts, and my family moved to Raleigh, North Carolina when I was about 3, and I've lived there ever since. And I don't know if you're too familiar with North Carolina, but a little bit outside of Charlotte, about an hour away from Charlotte is Greensboro, and that's where I go to school. So I'm right now I'm a freshman, and I'm double majoring in finance and economics. And yeah.
So we always ask people on this show this question, but what was life like growing up before you got to college?
I mean, life. I grew up a lot with my grandparents. My mom worked a lot. She's a pediatrician, and so she used to work a lot. So I used to stay with my grandparents a lot, and my grandparents are from Haiti. They were born in Haiti, and they didn't move here until they had kids. So they're very very Haitian. So I grew up getting grew up getting a little piece of both. And then my mom's a little more Americanized. She was born in Haiti, but she moved here when she was young. So it was growing up was fun. We grew up being Haitian. We grew up super family oriented. I'm best friends with all my cousins. We're all very close. We all used to stay at my grandma's house all the time over the summer for weeks on end. So it was very family oriented, and that today I'm super family oriented probably because of that.
Yeah. When did you get this idea to start these like businesses and start investing at such a young age?
I think what it was the earliest entrepreneurial story I can remember is had to be 10 years old maybe, and I remember being at my grandma's house, and I think I had either found or somebody had gave me a pair of earrings, like a woman's earrings, and I remember I tried to sell them to my mom, and that was kind of my first step in being an entrepreneur. I was trying to make money off of a free gift I got or found. And then growing up, I always had like an attachment with money. My mom used to give me money for lunch, and I would just hold it and save it. I mean, I wasn't saving for anything, but I would just save money just to have money. And as I got older, I started to explore different types of ways to make money. And then I was growing up in a more digital age. You kind of if you have an attraction to money, you're almost always gonna find how to make money on the digital side. Yeah. So it's kind of led me down that road.
So which one did you start first? Did you start drop shipping or options first?
I started drop shipping. I started before I turned 18 when I was around 16 and a half, 17. I would try drop shipping, but I never really dived into it, as I should. I never really at the time, people will say if you treat your side hustle as a side hustle, you'll get side hustle results. So I kind of put it off to the side and then never really found any success until after I turned 18 when I started to take it a little more serious. And then as for the stock market, I never really traded. I always used to pay attention to the stock market. I used to try to do research, but it was kind of pointless. I never had an account until I turned 18. I remember the day I turned 18, I opened up my first brokerage account and I had a couple longer term positions. I read a lot of books, so I knew that when the market kind of fell back in March and early in this year, that I was looking at that stocks being on sale. So I used to open up a portfolio that was pretty heavy in airline stocks and cruise stocks, and that paid off for me pretty well.
Yep.
And so I actually took that money. I remember I sold that portfolio completely off in about August, past when I was 18, about 18 and a half. And that's when I started to kind of learn options trading. And that was kind of right off when I had a store, a dropshipping store that my first big store, like successful store. I had just got done with that store and I sold off my portfolio as well. So I had cash from the store as well and cash from cashing out my portfolio. And I wasn't in any trades, but I remember just like reading up about options trading, learning options trading. And then I had a little bit of success with options trading and some losses in options trading. And my first big options trade was this past October. And it was a swing trade, yeah.
Let's talk about the big trade. What did that look like?
So it was a SPAC. You're probably familiar with HCAC. It was that HCAC, and they merged with Canoe.
Hold on one second. We got Rashana in the building.
Oh, okay.
We got Rashana Scott in the building. I didn't know you were coming. My bad. My phone, I didn't even see that you were asking this question. My bad, Rashana. She sent me a text.
Oh, okay.
I did.
My bad. And you called. My bad. I keep my phone on silent because you don't just want all these random notifications just hitting you all day. I apologize.
Alrighty. So, sorry. Okay. So you guys got started. Are we recording?
Yeah, we're recording. I got to make sure I mention Donna the Voice at 6. Well, I think this is like the 11-minute mark. At the 11-minute mark, Donna the Voice, please catch this. Because he won't catch it sometimes.
Okay.
I can't see. Are you doing it blind? Is that what you're doing?
Yeah. Is that okay? Are we?
I guess that's fine.
We aren't doing video, right?
We'll do it however you want to do it. We're on video, but you can if you aren't presentable, you can just keep it as is. So what we talked about so far is we talked about who he is, where he's from. We've talked about what life was like growing up. We talked about so I'm not sure if you know him, but he was the young man who was drop shipping and options trading, and he ended up buying his first rental property this year at 19. And so we were just talking about his most successful or his first successful options trade.
Nice.
So we're working through that. So let's do it. So what was the first successful options trade?
Okay, so it was actually a swing trade that I jumped into. I jumped into it with about $4,000 total between two brokerages, and it was a trade that I kind of jumped into, and I had enough confidence. I hadn't done enough due diligence to just jump in it and leave it alone, and it kind of went up and down. I think at one point I might have been down like 50%, but I just left it off. And I remember one day out of nowhere, it started to pick up momentum, and I had jumped up really quick to be up 100%, and then 200%, 300%, and then there were days where it consolidated down. And I remember I think after like 2 months, maybe, I know in December when I closed out the trade, I ended with like a profit of I don't know if I'm off the percentage. I think it was like 1,800% on that trade.
Wow.
Yeah, it was pretty big trade. Yeah,
So
that was kind of
1,700%, and you put up $4,000.
right, $4,000.
What does that equate to?
So I got in. I got out of the trade at different times due to on my brokerage. On one brokerage, I kind of sold some of the my contracts a little too early because they were consolidating pretty hard, and there was a certain amount of money I wanted to walk away with guaranteed. So I sold the majority of those and let the rest of them run, and the rest of them they ran pretty hard. So I know that when the trade was over, I turned that $4,000 investment into around 72,000. I'm pretty sure.
Wow.
Yeah. Yeah.
That's
So
crazy.
yeah, and I look back all the time and wish I would have put more money into it because I would have. Yeah, but
That's insane, man.
That was great.
In terms of due diligence, what are you looking for when you're looking for a trade like that?
So on this company, there wasn't too much due diligence I could do just because it was a SPAC that needed to merge. So I kind of just looked at the company that was merging. I looked at their financials and like their what they've done in the past and like where they want to be in a couple of years because it was an EV SPAC. So they haven't had any major revenue. Don't have any products on the market, but it's really speculative. So I just did and they had a lot of presentations I watched and looked at some of the SEC filings, and then for me, I was comfortable enough to throw in that much because I mean I had enough faith in the company, and it turns out it paid out pretty well.
Nice.
So for people who might not know this, what is a SPAC? Because SPACs are kind of new.
Right. So SPAC is I almost forgot to say. But a SPAC is a special purpose acquisition company, and I think most times, correct me if I'm wrong, it's like a hedge fund or like a capital firm that'll go and acquire a smaller company and bring them to market, correct?
Right. Essentially,
Right.
yes. Yeah.
Right. Yeah. So
It's a way
this
to
one
kind of
was
bypass the IPO.
right. Yeah. Yeah. It's like a cheaper IPO. I'm yeah. You can IPO without having that big, huge amount of capital. So yeah, that's this particular SPAC. I don't know if you're familiar with Canoe. They were an EV. They were kind of attacking the business to business or business to consumer model. The like kind of you see FedEx trucks driving those big trucks, and then Amazon they driving those big Ford trucks. Kind of that's their main market where they were trying to take over. And they also do have a consumer car and a consumer van. So they're pretty good company. The few presentations that they had that I watched, they were pretty strong. They have a couple people that came over, I think, from a lot of big name car companies like BMW and a couple of those companies. So their management is pretty strong. So I do think down the road, I think that their company is going to be a strong company. But for this particular option play, it was a good play.
You mentioned that you had some losses. What lessons did you learn from those losses?
From the couple, there weren't too many losses because after that one loss, I had one loss, and back then I was trading with so little money that any losses really was a big loss. So I took a big loss. What was a big loss to me, and I kind of try to stay away from options trading after that. So I learned to be more patient and to trust my due diligence because I think one of the plays where I had lost a lot, I lost, and I only lost because I sold because I remember a couple of days later I would have been up if I would have held really quickly. But yeah, that's kind of one of the main things I learned. But yeah, be patient.
It's definitely a key because you put your money up for a reason. You put your money up because you saw something, and sometimes the market can kind of shake people out. But a lot of times, if you do the due diligence and you just let it play out, even if you miss short term, you're going to make your money on the long term, which is why we encourage people to not get weekly contracts. Want you to have at least a month, because I mean, even if it's good news, sometimes good news can make the stock react badly in the short term. But then at the end of the day, it's still a quality company that's growing. They're doing some great things. It'll get there.
Right. Yeah. The contracts that I bought were actually, at the time I bought them, were about 5 months out. So yeah.
At 19, where are you learning all this stuff?
That was gonna be my question.
Yeah, I actually get that question a lot from my peers and people, even in my classes. People ask me a lot of the things I learned is from YouTube. I would watch YouTube and go on just strings of YouTube videos, like different recommended videos YouTube throws at me, and then that's probably about half of it. The other half is probably from reading. I'm not a big fan of reading, but I do have a ton of financial books.
So how long has your research process been before jumping into your first trade?
My first, in terms of for the options trade, that research was probably about. I mean, I had always been familiar with options, but I never took it too seriously. So before that, the big options trade, probably about 3-4 months, where I was actually trying to learn options, trying to teach myself the Greeks of options, like the more advanced parts of options. And then in terms of drop shipping on the other side, that research process was a lot longer, probably like a year and a half. And I kind of caught myself getting into analysis paralysis, where I was just learning and never taking any action. And then I finally took action. I missed, and then tried again, missed, and then that kind of drew me to fall in love with just taking action and missing, but learning. So that's my preferred way of learning. Yeah,
that was good. That's a bar, man. That's a bar.
Thank you. Yeah, that's the way I always prefer to learn. I was just trial and error, you know.
Now let me ask you. So, have you ever had a real job?
Yeah, I've worked 2 real jobs. That's kind of, I mean, you could call that kind of startup capital. When I was, I think 16, maybe 17, I haven't been able to have a long-term job because I played football in high school. So when as soon as the season ended, I remember, I think after my junior season ended, I went and got a job at Subway, and I worked there for like 4 months, and that's kind of when I learned that I kind of struggled being an employee. I didn't really like listening to people telling me what to do. I wasn't a big fan of closing a restaurant at 11 p.m. So that's kind of what drew me to start learning things, and then I would start learning, and I quit that job, and then later that year, football season ended again, and I got a job at Panera Bread, and I worked there right up until like February when the pandemic hit, and I actually went on. They put me on leave of absence for the whole pandemic, and then when they called me to come back, I just never came back. I just couldn't. I mean, that was after
you made 70 grand, man.
Right, exactly. I just couldn't do it. Yeah. Right. So that's where I got the money to try to start these different types of things, pretty much.
Yeah. In terms of drop shipping, because I don't think we've ever had anybody on here who has really done it. What does that business model look like?
So basically, drop shipping is it's kind of like a lot of people call it you being a middleman. You're gonna take a product from a manufacturer that you get at a wholesale price, and you're gonna create a website for said product. You're gonna market that product to consumers at a retail price, and you get to keep that difference of what you pay wholesale and they pay retail, and advertising costs, product costs, etc. And yeah.
What products were you using, and how are you positioning them? Were they on like your own personal website? Were they on Amazon, eBay? What did that look like?
So I've never actually had a dropshipping site on Amazon or eBay. I always did mine through Shopify, so I didn't have to go through any big hosting platform other than Shopify. So I did own the stores, and my product wise, I tried so many different products. I think before my big store, I had 20 different stores that were just hit or miss. Try a store, learn something, scrap it, try something else, learn something else. And it took me a while, like a good year, until I was able to have any real success from dropshipping.
How do you line up the products to stock your store? Is this through Alibaba? Is this through something else that I'm not aware of?
So when I was first, so my successful store, when I had the product, because in this model you don't ever see the product. I mean, I had a couple products shipped to my house just so I could make sure they were quality products, but it's the direct manufacturer to your customer. So when I first started, I drop shipped off of AliExpress. It's kind of like the sister company to Alibaba.
Mhm.
And once I reached a certain amount of revenue per month, where I thought I needed to, it would help my bottom line to get cheaper wholesale price. I went to Alibaba, and on Alibaba you can find agents. So I found myself an agent, and she was able to get me a cheaper price and faster shipping, and that's when I moved to that. And kind of that was actually one of my first steps in automation, where I was able to get that part of to run by herself. I didn't have to fulfill any orders every day. She kind of did that for me every day.
Wow. Wow.
Nice.
What was the product that took off for you?
It was actually a pen, a beauty pen, like a acne pen. It's like an LED light pen that you just kind of rub in your face. Yeah, and
You don't even think that.
it's one of those products where forgot how I came across it, but it's a product that like you don't see too much. That's kind of what drew me to it. A lot of times in drop shipping, a lot of people run the same products, try the same products, and they don't really care about how branded their site is. They just want the quick money and to get out. But this product was something that I had never seen before. It was pretty different, so it's kind of what led me to it.
So are you currently still just doing like drop shipping on your own, or have you hired a team? Have you expanded yet?
Actually, with that drop shipping wise, I don't have a store running right now. I'm actually in the process of selling that store. I'm exiting that store, and I don't have anything running e-commerce wise right now. I do plan to have something running in a couple of weeks, a couple of months, probably 2 months at most. But I mean, in terms of drop shipping, I think being in the closing process for the first time, that was kind of took all of my time. So that was something that I hadn't done before. So kind of allocated all of my time to trying to be there for everything that was going on.
What does a Shopify exit look like, numbers wise?
Numbers wise, well, kind of depends on. So my store, when I first ended the store, it was valued. Shopify has like a platform where you can go to sell your stores. It's called Shopify Exchange, or the Exchange by Shopify, where they'll give you a valuation. And then my Shopify valuation when I went to sell that store was right around 17.5K. Like that was what they were saying my store was worth. So I think I planned to sell it. I planned to sell it for about 15K. But something that I had learned in doing this store was bookkeeping and keeping papers and keeping account of everything. And that's something I didn't do. So it was kind of hard for somebody that had capital like that to come and buy my store, because I just didn't have my everything together. So right now, the store I still have the store, and I'm in the talks with a couple of different people that want to buy it, and they're looking at buying it for around 5,000, somewhere around there, 5-10,000.
Charles will buy
I
it. Charles is buying everything.
gotta see the numbers.
Well,
That's
Charles, it
cool.
sounds like a deal. Buy it at 5 is valued at 17.
Yeah.
yeah, that's why that's why I've been telling people, as long as anybody who buys it can, they and that's another thing. People will come in my DMs and ask me when I remember posting that store for sale and telling my followers that I was thinking about selling it. People would be asking like, "Oh, will I make immediate money? Will I make money off of it?" And I just tell people, if you learn how to market, you gotta learn the skill first before you can expect to make money in whatever you're doing.
Yeah, that's good. And I think there's definitely a lesson there too. You mentioned trying to sell it around 15, but not having all your paperwork in order. And I
Right.
think a lot of entrepreneurs, I don't want to say get that wrong or mess that up, but I mean, I think it's, and we talk about this often too, like how many of us, we don't have a playbook to this. So we're just kind of
Right.
winging it. And then
Right.
we're like, oh, okay, I saw some success. But,
Right.
had we known, like, oh, you have to have your ducks in a row from the beginning, in
Mhm.
order to be able to turn around and scale. And like, this is what investors
Mhm.
are looking at and looking for. And so
Right.
I think, We just need to encourage more of our peers to be in position. Basically, like when you're starting businesses, start them with the intent to sell, and then
Mm,
position yourself from the beginning to already be set up so that when that time comes, we aren't scrambling trying to find all the documents and find all the information. Like, it's already there, it's already scalable. So let's get in the mindset of creating scalable companies and businesses from the start.
Right. Exactly. Bingo. Exactly. That's kind
Yeah.
of, yeah, that's kind of how I went into it. It was more of, let me try this for fun. I don't have anything going on right now. So I didn't start it with the mindset that this is something I'm going to scale to do $50,000 or however much money. So when I did have that success, it was like, oh, let me back check. And that's kind of what threw me off. And then that's kind of why the store's probably not running now. If I had my ducks in a row before I got it started, probably would still have the brand running. It'd probably be well over six figures, etc. So that's something
that's
I did.
that's the hard part, because a lot of times success can be surprising, because you said you
Hmm.
launched 20 products and this is the product that hit.
Yeah, right,
And like,
exactly.
you're probably just in the mindset of just execute, 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 and then find out what works. Um, I think what might be a good idea is maybe to continue to run and scale and grow the business, get your processes in order now with the bookkeeping and all that other record keeping in place, so that then you can sell it for a larger number,
Right,
knowing what you know now. But
right.
dope. Um, let's talk
So the
about the
rental
property,
property.
man. Yeah. Let's talk about the prop. Where did you learn
Definitely.
about real estate? To the extent, because investing in real estate and buying real estate are two different things. So where did you learn about the process of investing in real estate?
Um, I I'll probably say again YouTube. I used to watch a lot of. I don't know if you're familiar with Graham Stephan and Meet Kevin. Those guys on YouTube. They would be a lot of in my recommended. So I eventually subscribed to them and would watch all their videos. And they kind of introduced me to investing in real estate. And I have the Bigger Pockets book on real estate investing. I have that book, and then another book, Building Wealth One House at a Time. That book, and then yeah, I've just done a ton of research on real estate investing, like so much to the point where I kind of was doing like I felt like I knew real estate like the back of my hand, and I felt like I needed to get my first property. And that was actually one of my goals. I think I wrote down last summer one of my goals was to get into a was to get my first real estate property, rental property, before I turned 22. And then that was something I was able to do.
And then
Um,
the process of buying it. So how'd you find it? Was it on the market, off the market? Did you work with the realtor?
Oh yeah, so actually I was on my laptop. I was inquiring about a different multifamily that was on the market, and there was a seller that was selling all his. He was selling three houses in a package deal, and one of them was a triplex that I was interested in. And I talked with the realtor, and he told me that he wasn't interested in breaking him up, but he could send me different properties. So I remember he texted me and sent me I think three properties. Two of them were single families, and the third one was listed as a single family. But when I looked at the pictures, it was an obvious and triplex. So we went to go look at it, and it was on the market. And turns out the whoever listed it, for some reason, I still don't know why, but they had it listed wrong, incorrectly. The listing was. I always tell people when I talk to them about this that the listing, I don't think it was a good listing. Description was short. There were not the pictures were pretty bad, and it was listed as a single family when it was a multifamily. So I feel like it might have went over a lot of investors' heads. So I remember I went to look at I looked at the property maybe three times before I actually put an offer on it, and that process was really like, I think it was like a 2 month long process of going back and forth, just because I was at the time I was 18, and I still didn't have I didn't have any tax returns yet, and that was the hardest part. And because of
right.
COVID, because of COVID, bank statement loans were not happening anymore. I couldn't go that route. So my original plan with this, I wanted to get an FHA loan, and because one of the units were moving out, and I was gonna try to get an FHA loan, but that wasn't able to work. So I turned to private money, and I went back and forth with a private lender, and after I think a month and a half or 2 months of talking about like countless private money lenders, I finally got one that was the rates were good enough and sounded like we could work together. So after that process, I finally after 2 months put an offer in, and we went back and forth on the price, and we agreed, and then we were gonna go to closing, and then the appraisal came back, and then I needed my lender kind of switched on, like the rate kind of switched a little bit as far as down payment. So I asked for more money from the seller, and we got it, and we closed. And that was a long process, but looking back, like, happy I went through it because I learned a whole bunch through that process.
What condition was this property in? Did it need rehab, or was it just kind of move-in ready?
It was actually fully leased. So the property's fully leased. I bought it fully leased with they had long-term, year-long leases in place.
This
And
dude.
yeah, they
This dude walked into pure landlordship at 19.
Yeah, I did. Yeah, there was
no house hack, just straight landlord. Like,
yeah, I wanted a house hack, but yeah, no, I do still plan the house hack down the road, but yeah, no house hack, just straight. They were living there, fully leased, fully occupied, and yeah, it was. I feel like I got a little lucky with especially on the price, because he came down a good amount from where he wanted to be, but I think just due to the listing, he just couldn't get that price. So yeah.
So the purchase price was how much, and then how much did you have to put down in cash?
The purchase price was at the end we got 275,000, and I had to put down right at 50,000. So that left, I think, down payment exact percentage was like 18.6% down.
Mm-hmm.
After that's what my lender gave me. He wanted to do 20%. Yeah. Right.
And what was your rate? Because I know you said you went back and forth with a couple lenders, for months, and then you found the right one. So what was the right one to you?
So because of my age and I had no experience, they all kind of were either telling me no, they wouldn't be able to do me on a rental loan. I had one lender tell me that if I added my mother to my LLC and made her the majority owner of my LLC, they would be able to qualify me. And there was some other stuff they wanted me to do that I couldn't do. So I eventually got to this lender, and we spoke back and forth, and he told me that what he could do for me was a bridge loan. So actually, I don't have a rental loan; it's a bridge loan. For the bridge loan, the loan balance is like 225,000. That I have a year to either refinance or sell. So that they just gave me, after he told me that the really only thing they could do was a bridge loan. I went back to the lenders I spoke to previously and asked what their rates were on a bridge loan, and I think it ended up being 8.49% interest only payments for a year. Yeah, on that bridge loan.
How much are those payments, and how much are you earning in rent?
The payments are $1,595, and the rent right now is $2,279.
Okay. And so what's the plan? So how are you positioning yourself for your exit, your refi?
Right. So that's kind of where I'm at now, where I've been thinking. I originally planned to refi down the line, but I don't know what that timeline is going to look like, just because the leases are so long term. It would be kind of hard for me to do that rehab right before. I'd have to kind of do it right before I need a refi. So I don't know. I'm not confident that timeline is going to work, but I do. If I were to go the exit route of selling, if the market were to stay how it is now, I know that, and I've gotten calls and interest at around 300,000. I know that my loan balance being 225. If I were to sell at 325, I still walk away with 100K. So I've told myself that if somebody were to come to me with an offer at 325, I would exit that way. But right now, my plan probably is still to refi if I can and try to pull out some of my down payment. But I'm not sure that I'll be able to get my whole down payment back. But
yeah, and I think the thing is, having those conversations now with lenders that will basically refi on the asset in place, because you do have the tenants in place, you do have, those leases that you can show, and you already have basically 75 to 100,000 in equity in the building. So I actually don't think you'll have an issue with refinancing. And it's just a matter of finding the right lender. And the good thing is that you do have the time. But like you
Right.
said, if your exit, if you decide to sell, you're good either way.
Right. Yeah. That's the only thing with the value on the home. Before I closed on it, I was assuming the value was going to be a little higher than what it came back at. But they told me we actually had the property under contract at 290 before we came down, and because of that, they told me that because of the housing crash of 2008, that usually when you go get a house appraised, it's going to come back around the contract price. So it came back right at 290, and yeah, so that's what led to all the trouble with the lender and them kind of saying that I'm probably going to need more down payment just because of the LTV. So yeah, that's right now I'm hoping that I'm thinking that if I were to get another appraisal, it'd probably come back higher, but I'm not too sure.
Are you currently on the market for more properties, or are you just content with what you have now?
I couldn't see myself closing on another property right now. I do always watch the market. I like to see what new houses or multifamilies come on the market. But I think that I actually saw a video the other day. It was talking about new investors needing more revenue as opposed to cash flow. So I'm thinking that's why I started thinking recently that might be smarter for me to sell because that'll be more of a flip, but it'll give me more revenue to go out and do it again and have more cash left over, cash reserves, and then be able to kind of repeat that process over and over again.
And then also consider a renovation loan too, right? Because
Okay, right.
versus, when you're just putting a flat out 20% down, you may be able to find some lenders who will actually finance you at like 10% down on a purchase and finance 100% on a rehab. And then you can refinance out of that, into a longer term loan too.
With more equity because you improve the property.
Right, exactly right. Yeah.
Nice.
You said you made $72,000, bought a house. What other stuff did you buy? Did you buy any crazy stuff, or are you just super responsible?
I mean, I wouldn't call myself super responsible. I definitely didn't go out and splurge. I do like, I mean, I tell people I like nice things, but I try not to go out and do anything crazy. I feel like I could have went and bought a car or went and bought a bunch of jewelry or whatever, but no, the house was definitely the biggest thing I purchased. I might have bought a pair of shoes but that's as far as I went. Yeah, I didn't.
Rashana, when you did your first flip and made some good money, what did you buy?
More properties.
Dang.
Yeah.
I feel like, honestly, as an investor, when you make your money that way, it's just a different mindset. Because I mean, last week I made good money, and what did I do? I bought more stock. I didn't say, "Oh man, I made a bunch of money by investing my money. Let me go spend it on some stuff." I think it's just a different mindset. When you make your money investing, you're more inclined to invest as opposed to buying liabilities.
Yeah, exactly. And I mean, I think there's a timing is everything, right? And so at certain points when you slow down and you're like, okay, time to celebrate myself or reward my hard work. That's one I guess way to look at it. But like even like if you're talking about like splurging on yourself, like I have a luxury car, but I put like $1,000 down when I drove it off the lot, and then my car note is I'm leasing it, but it's a write-off, so it's not even like I can't even say I went and splurged and got myself a luxury vehicle. Like at that point, it just became a business expense as the business made more money. And then, like you said, in terms of investing, it's definitely a mindset because you obviously have a proven track record of investing money and making more money and versus investing money, making money, and then spending it on liabilities and seeing that there's no return there.
Yeah.
Right. Exactly. Yeah.
A lot of us of this kind of mindset, we've read the books, we've read the Rich Dad Poor Dads, we read all that stuff,
Yeah.
and you're just like, nah, no liabilities, man.
Right. Exactly. Yep. Exactly. But I found that once you do make money investing or buying assets, it's kind of hard to, once you make more money, it's hard to just, I feel like as if like I'm throwing money away at that point if I just go to splurge on myself.
Exactly.
So let me ask you, what as a 19-year-old, with so much success and experience now, right? With everything that you've had your hand in, what is life like amongst your peers and family members?
He gets all the ladies.
Yeah, they you could
I heard you got a rental property.
Yeah, they I mean, yeah, I don't say nothing too crazy, but they a lot of my, especially my peers, they come to me and they'll just be like, oh my gosh, you're so rich. Like they think that I'm a billionaire, or I think that I'm like Bill Gates or Warren Buffett. And I mean, I understand, because I remember at one point I was in a place of not really understanding that aspect of what, like, how to investing work. So I do get a lot of people that ask me questions, and a lot of times it sucks because a lot of those people are like, how can I make quick money? How can I have $500? How can I flip that? They don't really too much understand. So a lot of times people will, especially my like close friends, will come to me and say, no, how do I make money? And I'll ask them like, oh, well, if I give you a book, will you read it? And a lot of times they'll be like, oh, I don't know. So that kind of offsets the people that are really serious about wanting to make
Absolutely.
money. Yeah.
Absolutely. Yeah, and that was going to be my question. Like you said, it's like, oh, they're excited and they're like, oh, you're so rich, but how many of them are actually saying, can you show me the way, and mean it?
Right, exactly. Yeah, I've had a couple people that I tell, well, they'll come to me and they'll tell me the full situation. I'll be like, well, I have a book I can give you. I'll ship it to your house right now. Do you want it? And they're like, oh, I don't know. And yeah.
So have you yet to have one person like seriously wanna, no.
Not too serious. I've had conversations with people that I can tell are serious, and they're not too into reading. They just rather have those conversations, because a lot of my friends don't really have other friends that are too financial or in this space. So they like having the conversations. I know that for part, but I mean, I've had people that I can tell are serious. My little brother, for one, he came up to me one day, or he texted me one day while I was at school, and he told me, I think it was during, he saw on social media the big AMC, GameStop, both those short squeezes, and he texted me like saying, "Hey, I'm ready to start learning," and things like that. But other than that, nothing. Nobody too serious now.
What are your go-to book recommendations?
My main one always Rich Dad Poor Dad. Anytime anybody already asks me, Rich Dad Poor Dad. Actually, you bring that up, that does remind me. I had one friend who moved away. He moved to California, and I actually gave him Think and Grow Rich, and I think he did read that. And he's actually like, I think he had a stock portfolio of $1,000, and he's sitting at like $17,000 now in his stock portfolio after reading the book. And me and him, he's one of the guys that I remember he would come to my house over break, and we'd chop it up about stocks. He would come watch me trade in the morning, and we talk. That was somebody he was pretty serious, and he paid off well for him. And then
that book is a game changer.
Yeah, it really is. Yeah, that's the book that kind of, yeah, for sure.
My mom, she's a CPA, and she left her firm in December, but she's the person who brought me Rich Dad Poor Dad like years ago, 10 years ago. And she was like, you need to read this book. She got me the book. She wrote her a little nice statement inside of it. I read the book, and my mindset was changed. And I was always shocked. I was like, you haven't read the book that you gave me and told me to read. And so just recently this year, she read it like in the end of 2020. And that was when she left her job. And she's like, I'm not going back. And I just put two and two together. I was like, that's the difference. She finally read the book she told me to read. And now she's like, I'm not going back to the job. I'm not letting them rob me.
Right, exactly. Yeah, that's always whenever anybody ever tells me they want to learn or they want to get started, I always tell them read Rich Dad Poor Dad, because that book definitely changed my whole mindset and actually made me start taking steps that were like actionable steps.
Yep.
Definitely.
Nice. So shout out to you for being the youngest podcast guest that we've had.
Yeah, he is.
Thank you. Appreciate it. Thank you.
Yeah, I'm excited. What do you think? The difference is between you and your peers who say they want to get started, but they don't.
I would say one of the biggest differences is delayed gratification. A lot of people in my age group, give in my same position would probably go out and splurge, would be driving nice cars, etc. But I would say the biggest difference is that they don't. A lot of them lack the knowledge, and they think it's something that's a little too far off for them to go get. And I'll kind of explain that no, it's not really that hard. And they're kind of a lot of people. I feel like a lot of people in my generation or my age kind of attracted to shiny objects. They see, oh, he has a lot of money, and they see the big money. They don't see like what actually goes into it. So then, as a result, they're not really in the position. They don't want to go put the work in. They don't want to stay up late at night looking at charts or watching videos or any of that stuff. And that's kind of the biggest difference for sure.
Nice. Got it.
Yeah.
Cool.
Dope. So I think we can wrap up now. We'll ask you our final questions. The first question is, what is your favorite, and maybe we already know the answer to this, but what's your favorite business or real estate book?
Rich Dad Poor Dad for sure. Got to be Rich Dad Poor Dad.
What about podcasts?
Podcasts I listen to. I think the podcast I've listened to the most is definitely Earn Your Leisure. I listen to them a ton. Definitely, if I'm ever on a long road trip, I listen to one or two podcasts. If the only time I really listen to music in the car is when I have friends in the car. So I don't have friends in the car, I'm probably listen to a podcast. And sometimes I try to put a podcast in the car when they're in the car.
Me too.
Yeah, I'm like, hey, I'll just listen a little bit. But yeah, I love Earn Your Leisure. That's a really good podcast. I like that podcast.
This guy is 19. Where is he going to be at 30, Rashana? Where is he going to be, man? At 19,
wherever he wants to be.
At 19, I was
wherever he wants to be. That's what matters.
He is. Man, I wasn't on it at 19. I was like trying to throw parties and wearing tall t-shirts.
not the Foot Locker tall tees.
Really, really long t-shirts.
The 5 for $20.
Yeah. Man, this is impressive.
Yeah.
Who was somebody that you look up to? Who was somebody that you look up to and why?
I don't necessarily have anybody I really look up to financial wise, but outside of financial, just in general, I really look up to my grandma. For me personally, I look at her like a superhero, and she moved from Haiti with the whole family when her and my grandpa were pretty. They weren't too old, but they had a good amount of. I think they had 8. I know they had 8 total kids, and then that time they had 6 kids already born. Moved everybody to America. My grandpa actually started a couple of businesses. He owned a grocery shop, I think. My grandma owned a restaurant, and they did a whole bunch of different types of business type ventures. And my grandma, she's the strongest woman I know in my life. So I've always looked up to her for motivation. And whenever I find myself, taking losses and getting discouraged, I can always think on her and be like, oh well, if she didn't give up, I can't really give up. So definitely.
That's dope.
Nice.
Definitely. Thank you.
We kind of asked the other question, Charles, already.
What? I did? We did kind of, yeah, you're right.
We did. Okay, last question. What does success mean to you?
For me, I feel like I've had a lot of success, but I feel like I've had a lot of what other people see as success. Me personally, I want to get to the point where I'm doing for other people what like my grandma does for me. I want people to look up to me and be like, okay, if he can do it, I can do it. So that's kind of why I go hard. I try to talk to my friends about it. I try to post as much as I can. I'll answer questions for free. I'll give people ask me questions. I'll answer anything because I just want to be somebody that people can look up to and feel like they can do the same thing. That'll probably be success for me.
Dope, man. Thank you for coming on the show. Thank you for sharing your story. Where can people find you, follow you, and learn about more about what you have going on?
You can follow me on all social media at Noah Lawton. It's NoaLawton. That's pretty much my handle on any social media, Instagram, Twitter, all of that, LinkedIn. Yep.
Nice. Any last words, Roshana? It's been a while.
Yeah, it has been a while. No,
It's been
just
like a
thanks
month
so
and a
much.
half.
Thanks so much for coming on. I am inspired. I'm sure there's a lot of other folks who will be inspired. Again, like I said, you took the crown for being the youngest on the
Thank you.
show. I mean, I'm excited to
Thank
see,
you.
just where you are 2, 3, 5, 8, 10 years from now.
Yeah.
Like, it's gonna be super dope.
I mean, think about it.
Appreciate
He
that.
has a property. He put 50 into it. It's gonna net him another 50. The snowball just starts rolling from there.
Right.
Plus, he also has options. So it's like you're ahead of the game, man.
Yeah, and that's actually my goal. I if I were to exit right now or in a couple months, I would probably pit a lot of that into options and trade heavily for the year. Probably start another e-commerce brand, and that's probably 2021 goal.
No job is paying a 19-year-old
Mhm.
$72,000.
Absolutely not.
Definitely not.
So thank you again for coming on the show. For those who are listening, please leave us a rating and review. Make sure you follow him. We'll have all his links in the show notes. Also, check out our sponsors. Their information will be in the show notes. My name is Charles Oglesby with Roshana Scott. This is episode 159. Signing off. Nice. Very good.
Thank you so much.
Thank you, guys.